So Ranko, we've had the RBA minutes. They're not the most illuminating or exciting minutes in the world, but I found it interesting that in the first paragraph they're talking about the problems of the strong Australian dollar. Do you think they're going to continue to try and talk down the currency?
I think the RBA is realising that its ability to jawbone the Aussie is actually diminishing. And so, like many other central banks, what we've seen is actually a massive step backwards from providing much forward guidance in terms of its actions. And I think part of that is an acknowledgement that if you want to get the markets to move, you need to surprise them a little bit more. So really, walking back the forward guidance is perhaps looking ahead to, if they do need to make further cuts, they need to perhaps reduce the time that they basically telegraph those moves in advance.
Is there a new norm for the Australian economy? They're talking about how domestic demand is weak, that unemployment's going to remain elevated for longer, and commodity prices suppressed for a long time. So the outlook for the Australian economy actually looks quite grim.
Yeah, that's right, and it absolutely is the new normal. So the mining boom has ended. The large sort of investment we've seen in new productive capacity is ending, and so we do have to see a restructuring of the way employment is distributed in the Australian economy. And unfortunately, that does have some negative effects, such as the above-trend unemployment.
Yeah, one of the things that seems obvious from London looking at Australia is the strong property market, at least in Sydney. So surely cutting interest rates like they have is going to be pretty risky.
Yeah, that's right. And I mean, you also see the same thing in New Zealand. We've got the RBA and the Reserve Bank of New Zealand really, quite concerned about the sky-high, the soaring property valuations that we have. But in Australia in particular, there's also the fact the economy is not actually performing, all that well. And at the same time, we've just got these insane soaring property valuations in pockets of the country. So absolutely, it's a concern. But the RBA ultimately with interest rates is targeting inflation as opposed to property prices. So they do have to look at inflation, they have to look at the economy as a whole, and then they really have to lean more towards macroprudential measures for addressing risk in the housing market.
I know there weren't many hints from this set of minutes, but when do you think that the RBA, well, what do you think the RBA will do next? Is it definitely going to be a cut their next move, and when will that happen?
I think really that they were probably more likely to cut when the Aussie was sort of, it's probably quite cynical of me to say this, but they're probably more likely to hold fire on the cuts when the Aussie was kind of still on the way down, especially against the US dollar. Now that the Aussie has kind of recovered, I think potentially the RBA has one more ace in its pocket, and that ace is maybe one more rate cut towards the back end of this year. But certainly there was no hint of that in this minute. They very much in the policy statement today. So the RBA is very much saying that it's going to wait and see and exercise extreme caution. But my belief is that potentially there is one more downwards move in there.
Yeah. So where do you think the Aussie goes from here? Often you see the markets play with central banks that if a central bank wants the currency to depreciate, you see them almost call the central bank's bluff and the currency rises. Do you think we're going to see that situation with the Aussie?
Quite possibly, although I think the Aussie at the moment is trading massively on external factors. The two biggest external factors would be sentiment on the US dollar, and then also, again, another sort of cat and mouse game between markets and central government that's happening in China, where there's these big expectations that China will engage in further easing, which supports Aussie because it's their sort of major source of external demand. And also there's another cat and mouse game going on with really what the Federal Reserve will do in the United States. So the RBA is kind of caught between a rock and a hard place. They've got these powerful external factors that they do need to deal with, and I think the Aussie really is going to trade very much on things like oil, things like the Fed, and things like developments in China.
Yeah, it seemed it would be unfair of me not to ask about the election. We both have our election night beards. Yours more impressive than mine. But once this bump in the sterling wears off, where do you think it goes? Because actually there's still a lot of uncertainty surrounding the UK in terms of the referendum.
Yeah, absolutely. So, I mean, there certainly has been a bit of euphoria that's crept into sterling trading this morning. And, I mean, if you look at the macroeconomic fundamentals, inflation is, there's no sign of hope for inflation in the UK. Wages are not exactly likely to start picking up, especially not with further austerity, further fiscal tightening from the Tories. So that's a powerful reason, actually, for bearishness on sterling. And equally so, there's that massive risk that's now going to hang over the economy of the UK actually leaving the European Union altogether. So certainly beneath the euphoria, there are reasons for concern in sterling and the UK economy as a whole.